One can argue that in select quarters, expectations are running high, across sectors at least. Taxpayers are hoping for further relief and corporates are eyeing smoother compliance. And of course, as is the norm, Tamanna, the ghada of wish list is full, never mind the constraints that the government has. But welcome to the union budget.
Yeah, welcome to the union budget, alive and kicking. And I know there's such a huge cloud of worry. What will happen with trade deal? What will happen with commodity prices? Where is the next war going to spring up? But having said that, what is in our control is making sure our economy is resilient. And that is the messaging we're going to hope to hear from Finance Minister Nirmala Sitharaman this Sunday. Joining in on this very special town hall, of course, is our star cast here at our studio table. Saurabh, Gautam, Ravi, thank you so much for coming in and joining us on this budget town hall. Today, it's not just Neeraj and I who will be asking you questions. We have our team here. We'll also get an opportunity, and we've opened it up to our audiences as and when they come in. So remember, reach out to us if you want to ask questions to our budget experts here. But Ravi, I'm going to start with you. Some would say that what else can the government do? The GST rationalization has happened, income tax happened last year, PLI schemes are already on the table, but they'll mangi more. What is on your wish list from the finance minister?
So let's take a step back and understand the background in which this budget is coming. There is a severe shortfall of tax revenues this year, and government's ability to spend more is severely constrained. So we can hope for all we want, but and that shortfall is going to be made up by RBI dividends, which is coming through rupee depreciation. So I don't see too much leeway available for the government to do too many different things. But having said that, I think a little bit of out-of-the-box thinking would help. Maybe not taking a pause on the fiscal consolidation would also help. I don't think markets will punish them too much if they were to not give a very aggressive target on fiscal consolidation. This is the year where we can consolidate a little less and focus more on spending. India is the only country in the world which is actually trying to reduce the debt to GDP when everybody else is expanding their balance sheet. So, and the markets are saying in no uncertain terms that our numbers have gone for a toss and we need to bring that back. So I think a little out of the box thinking, and maybe, I mean, again, I say it again that it's a wish list, but maybe counterintuitive thinking where reducing the tax rate will lead to increase in tax revenues will definitely help, but I don't expect that to happen.
Well, could serve two purposes. Everybody's talking about how to attract FIIs into the Indian ecosystem. Maybe the tax rate tinkering could help. Okay, we'll go in this order, and Gautam, I'll come to you. The point that Ravi made about the fiscal deficit or fiscal consolidation. And there is a lot of expectations that the debt to GDP will be focused on a lot more this time around, that becoming the primary anchor, allowing the government to do the consolidation in a slightly more benign fashion as opposed to the aggressive cuts in the past. Is that something that the bond markets will like as well? Or do you think the elevated yields could face even more pressure?
Look, bond market will definitely like that. And look, having a strong fiscal consolidation roadmap has helped India even as we speak. Look, we've seen so much turbulence globally, and forget the equity selling by the FIIs, but the macros are very, very strong and stable. Ravi talked about the, in general, India's strength around debt to GDP versus many other countries which have been expanding that. So that macro definitely helps, and that will be welcome. But I think what will help in general at a broader investor and market perspective is some level of medium-term guidance, not just a debt to GDP number. Like we've still, if you look at the entire trade taxes, customs, etc., we have seen ups and downs on imports, intermediates. If we have some roadmap laid out about the tax policy direction for the remaining 3-4 years of this term, that will also go along.
By tax policy, you mean anything about other taxes? Otherwise, there is an expectation that they will anchor it to 50% by FY31, the debt to GDP.
So that's debt to GDP.
Right.
Tax policy, not just a fiscal policy. Like what is the policy ahead for income taxes, for corporate taxes, for LTCG? Like every year we have this debate. But if we have that stability out there for the next 3 to 4 years, that goes a long way.
Just a couple of things. I think on fiscal consolidation, this government and this finance minister has proven time and again that no matter what the circumstances, she sticks with the red line. We saw that even at the peak of COVID. So perhaps that we will see. And there is a view that, what really happens in the budget, maybe this time that messaging becomes very crucial. Saurabh, you traveled with us to Coimbatore, where you saw the pain of textile exporters and maybe a bit of a balm with the EU-India FTA. Does it become very crucial to signal that we are in a position as a nation to withstand all of these threats and make sure that we grow our economy? Is that the one big takeaway you would be listening in for?
I think the way I see it, I think the government knows that the macro fundamentals actually aren't that strong. So if you take three straightforward indicators of macro fundamentals, right? Look at the consolidated budget deficit, right? Look at the amount of money that between state government, central government and PSUs are borrowing in the bond market, right? The bond market is getting stretched because of the sheer amount of consolidated borrowing by various arms of the government, not just the central government, state governments. So consolidated deficit, right, adding up various bits of the government of India, will be pushing 10% of GDP. That's not a small number. I think the government acutely appreciates that. If the government doesn't, I'm sure the RBI is calling up New Delhi and saying there's got to be a limit on how much money the fisc, state and central government takes out of the bond market. I think the second piece that I think the government's acutely aware of, Tamanna, is the job losses situation. Right, on the Coimbatore trip we heard, right, already 10% of the workers in the Tirupur, Erode, Coimbatore area have been sent home. And the longer it takes to crack the FTA with America, the greater the chances of job losses. I think the government is acutely aware of that. The various arms of the government have repeatedly spoken about how quickly they want to expedite a trade deal with America. And the third piece that we can all see, right, it's daily action on your channel, is the hammering that FIIs are rendering to not just the stock market but also the currency. And part of the reason is private equity money, venture capital money is exiting the country after selling in the stock market. Similarly, promoters are exiting. So I think in this circumstance, right, very difficult backdrop, right? Let's not make any bones about it. Tough backdrop on jobs, on the currency, on the stock market, on FII flows, on borrowing. The government will want to give a message that we are going to fiscally consolidate. If I was the FM, that's what I would do. I would say, come what may, this government is fiscally conservative. We will consolidate. Everything else, we will let the free market flows play out. We'll hopefully get an EU-India FTA. We'll hopefully get an America-India FTA later on this year. But my reckoning is on 1st February. The priority will be to send the bond market a message that this is a fiscally conservative government. The priority will be to send the RBI a message that you guys need to carry on easing monetary policy. I don't see what else they can do in these circumstances.
You agree with that, Ravi, that this is really the best course? Stick to those red lines and say that we are steadying our ship?
No, I think this government has time and again shown that they are more a bond market government. They are more a fiscally responsible government than they have been. Last year was a departure where we saw a direct tax cut and we saw an indirect tax cut. So from that perspective, I see a little bit of pivot, but as a percentage of the total spending, I don't think it's significant to make any kind of a dent. What we need is to revive other engines of growth. It's been only central government Capex that has been driving. Private sector has not yet kicked in. And exports are struggling, and so is the consumer economy. So we need to kickstart the other engines of growth as well. And for that, we need to relax the fiscal consolidation bit a little bit. I'm not saying the headline number will still be 4.4 going to 4.3 or maybe even 4.4. That doesn't matter. The headline number doesn't matter. What matters is how the internal is changing. Where is the money getting spent? Obviously, we all don't want too much of fiscal profligacy, which is already happening at the state government level. But at the central government level, we don't want too much. And there is also a pay commission which is lined up next year, maybe 12 to 18 months from now, which will be around 3.5 lakh to 4 lakh crores kind of a number. So there are things where which will actually kind of tie their hands up. Now, if those numbers are taken in this particular budget, then I think, and if they still give a 4.4% fiscal consolidation, I think that will be a big shift. But if they are not, and then we might, basically we are still struggling with reviving the economy. Economy is reviving, stabilizing, I would say, but in fits and starts and bits and pieces. It's not really a booming economy. While everywhere in the world, it's a booming economy. You know?
So what can the budget do, Ravi? That's the point, right? We've got a GST cut. We've got an income tax cut. The government has done its bit in the last 12 months. What can the budget do to revive any of these things. Private capex encouragement as well is not technically a budget function, if you will, right? What can the government do in this budget then?
No, I think I'll go back to what Gautam said, is essentially give some sort of a confidence to the entrepreneurs with a medium-term, longer-term view.
Okay.
We have had fantastic policy stability. We have had stable, political dispensation for a long period of time. And that missing piece is that to revive that animal spirits in the economy. And I think that's why out-of-the-box thinking, like giving some kind of a tax cut, even though it might sound counterintuitive at this point, because we are going to have a shortfall in tax revenues this year. But to revive the tax buoyancy, we will have to actually give tax
cuts to corporates, more tax cuts to
no,
corporates.
not corporates. Basically to attract flows into the we need to attract flows.
Gautam, kya FIs wapas aayenge if there is tax cuts?
If there is tax cut, it helps because look, historically, tax-adjusted returns for investors were still attractive, the global investors, which has not been the case in the last couple of years, clearly. But look, FIs have been selling in India for different reasons, not just because of tax or returns. It's just ultimately valuations, opportunities elsewhere, and lack of growth momentum locally. So I think the key is growth more than anything else. If the confidence around growth comes back, both for the near term as well as medium term, the investors will come back. But not in a hurry.
Not in a hurry. We've rightly called this the growth budget, isn't it? That's what we need. And you can write in to us on X. You have to go to NDTV Profit India. That's our handle. On WhatsApp, the number on your screen, 8169443399. So some of those numbers is where you can reach out to us. But time to get our participants in our town hall up and going. Who wants to go first? Okay, I'm not going to, Alex, I should not be partial to you, no?
But he raised his hand first.
But he raised his hand first. Go for it.
Okay, we haven't yet spoken, gentlemen, about defense. And we've had, of course, all the spate of geopolitical issues around the world. But in our backyard as well, we've seen quite a big, quite a bit of turmoil. So from that perspective, what do you think you would anticipate from budget in terms of, one, the big spend, and do you think that that's going to be targeted, if at all? Who benefits?
You want to take that?
No, go ahead.
No, I think the worldwide, the theme is we are moving from a unipolar world to multipolar world, and every man for himself. If Europe is thinking about increasing their defense budget, I don't think we have a choice. And the theme is likely to continue for sure for many years to come. I don't think it's ending at this point of time. And we still have a lot of catch up to do in terms of building our capabilities on the naval side, on the Air Force side. So anything but anywhere close to getting done. Regarding which companies will benefit, I would say, I mean, without naming any company focusing on the naval or Air Force and focused more on the electronics component of the defense equipment are the ones that should benefit, because that's where the new warfare is. It's the conventional warfare is no more. I mean, even in the last skirmish that we saw between India-Pak, there was not a single bullet fired. It was all about radars, drones, missiles, all those kind of things. So that's where the money is going to be made.
Either of you want to add to that? Saurabh, Gautam?
No, kind of agree.
I think on the main issue on the defense side, right, which I suspect will push the defense budget up again by 20-25%. The main issue is the jets. We were hoping that Tejas with the GE engines would deliver, but for whatever reason, either GE is playing hardball or there might be other issues with Tejas. It doesn't look like the Tejas-GE combination is going live, and I think that's where the government will have to spend money relatively quickly. From what I can see, I reckon the French, the Rafales will get more orders, the expensive jets. But given the predicament we find ourselves, where we are several squadrons light on where I think the Indian Air Force would like to be, and given what you mentioned, Alex, about the reasonably warm situation on the border, on the northern borders, I think the defense budget will again have to go up 20-25% with a preponderance of that jump going to buying brand new jets for the Indian Air Force.
Okay, let's get more questions in from our team. Mahima.
All right. I think my question is to you, Ravi. Today I read somewhere that there could be a 20,000 crore PLI which will be allocated towards nuclear energy. Just want to understand, because this is not something that probably India right now is looking at very actively, but Recently, a lot of reports have come out. There have been videos out talking about how uranium could be the next, goal, probably in the metal space. How are you viewing that space, one thing? And secondly, what are you expecting overall in terms of budget where renewable energy stands?
I think in this world of multipolarity, energy independence and energy security takes precedence over a lot of other things. And we have seen the way natural gas prices have shot up. We have seen, how even energy is getting weaponized by some countries. So you don't want to be dependent on anybody else. And in that scheme, if you see in the basket, whether it is solar, whether it is wind, whether it is nuclear, everything has a role to play. And nuclear is clearly the best in terms of providing the base load power. We have a target to achieve 100 gigawatt. And 20,000 crore, I think, would be a great beginning. I don't know whatever the number is, but essentially nuclear will have a crucial role to play in the new scheme of things, and we should encourage that. Not only nuclear, every form of new energy where we can reduce our dependence on imports, where we can reduce our dependence on other countries, we should encourage. And we should see, in fact, a larger allocation by MNRE towards PM Kusum, PM Suryagarh. All those kind of schemes will see larger allocations. So finally, the strategic importance of this sector is far more important than trying to build this at a cheaper cost by importing from other countries.
And let's see if that revives somewhat the downward momentum in multiples that this sector has faced of late. So it could be interesting. By the way, for the benefit of our viewers watching in right now, if you want to ask the queries yet again, if you want your budget queries answered from our experts right here, write us on X at NDTV Profit India, go onto our handle. You can also write us on WhatsApp on the number +91 8169 443399. Okay, before we take in a query from our experts again, one word on this whole, because the two questions that came in were on Capex, right? Therefore, Gautam, the question to you, could there be a focus towards Capex yet again? I heard, I think both Saurabh and Ravi say that maybe there's a pivot away from consumption towards Capex. If not away, then at least some focus on Capex yet again. Do you expect that to be the central focus of this budget? Look,
pivot away or pivot towards Capex, likely, but unlikely to go back to what we saw, say, 2, 3, 4 years back. Because that fiscal room is not available. So spending going back to in line with nominal GDP assumptions, slightly more, that's very much feasible. But you have to remember that the room is constrained, not just now, but also the upcoming pay commission in future. So the skew again will move towards consumption, so to say. Even this year, the numbers suggest the way the government is trying to meet the fiscal targets is also through cut down in revenue spend, which is interesting, YTD for this year. So some pivot, yes, but will it be a meaningful delta for sectors or markets? Unlikely.
I want to come back to the question that Mahima asked on, she asked about nuclear, but broadening that to the green energy basket at a time when one nation is calling it the green scam. You think India is going to double down on its push on solar, renewables, and that entire space, and it makes sense. It makes sense for us right now. My question is there the money to spend?
Across the world, green will go out of the window.
Out of the window?
Yeah, if the world's the country which accounts for 55% of global GDP is saying drill, baby, drill, then I doubt anybody else will can afford to be green oriented. Remember, the Chinese are also no great fans of green. So green was a good thing whilst it lasted. I think if anybody watching is a bull on clean tech, I would think again, America is bending over backwards to double down on fossil fuels. And we've historically been a big fossil fuel user in India, both on coal and on oil and gas. I think we will carry on being heavy on coal and oil and gas for reasons to do with defense more than anything else. The nuclear power sector in India will get a fillip. I think the recent privatization of nuclear in India will lead to global majors and Indian companies investing in nuclear. But this whole focus that we will go out of our way to subsidize clean, I think will gradually abate.
I want to get views across the table on that.
Yeah, I completely disagree with that. I think when the regulatory, economics and political tailwind combine, an idea that as time has come cannot be revived, cannot be denied. And it is not only about regulation, and it is not only about US. And Trump is there for 2 years, 3 years. Who knows what happens beyond that?
I actually heard someone say just 36 months more. Just
the
let me
levelized
get through
cost of
36 months.
energy produced through solar plus wind plus battery is going to be far cheaper than coal. It is already cheaper than coal today. Why would you, extract more expensive energy from the ground? Why would you depend on somebody else for your energy needs? So we have crossed the tipping point way back. It is not, nothing of that sort is going to happen. Yes, coal and oil can have the last hurrah, but I don't think anything beyond that is happening.
Just to add,
You have to weigh in now.
I'm more in line with what Ravi is saying. Because again, globally also ex-US, we haven't seen any pullback in terms of the renewables efforts and plans. In fact, nuclear as part of that is only getting a fillip. But solar, etc., continues to be the theme globally, not just in India. India, the bigger issue is the technology side. Does India is able to secure the back-end part of the technology, because that's dominated by China? That's a critical missing piece as we speak today. But otherwise, the focus will remain.
Okay.
Can I ask in one more question in here, and that might have commonality, right? Which is that for the existing infrastructure built out as well, we know that transmission and distribution is a problem. Can the budget have focus on the best systems, for example? Because even the current built outs that have happened need battery storage systems coming in by the dozens, if you will, in order to make it more efficient. So could the budget have that? Sort of, you may disagree on the impetus on green, but could within that green ecosystem things like BESS find center stage?
I think T&D investments, both center and state, have been clear on. They will carry on doing more. I think they've been happening at a reasonable rate. I think the CAGR of both center plus state, the compounded growth rate, has been again 20-25%. I think transmission distribution, and actually world over, world over, transmission distribution system transformers are in high demand. In fact, I spent the best 3 years ago, remember, looking for transformer stocks because there's a shortage of transformers the world over. So I'm not so sure. I'm not hesitant to say that T&D will be a good space to be in. The broader point on Capex, right? 2 months ago, I did a little bit of maths, and I was asking myself, if I'm the FM and I want to maintain fiscal discipline, and yet I want to please the market with a tax cut, what are the tax cuts I can afford?
Spend on defense.
So the numbers I did was I could knock off, as the, I'm the fictional FM here, the hypothetical FM. As the hypothetical FM, I could knock off 10 to 15% on the Capex budget and use that for a tax cut for those earning up to 15 lakhs, income tax cut for those earning up to 15 lakhs, because it's relatively clear the tax cut for those earning up to 12 lakhs has been popular and successful.
Yes.
So 0 to 15 kar do, right? And you still had a little bit of money left. And as the fictional FM, as the hypothetical FM, the step I would then take is for companies earning PAT less than 1 CR, I would look to drive through a corporate tax cut, because in the government data, it's very interesting. In the government's data, what's clear is that companies earning less than 1 CR of PAT in India, they've had a really rough time in the last 10 years, right? Unka profit growth, in that segment, less than 1 CR, profit growth has been barely 5-6%, whereas above 1 CR, profit growth has been 16-17% over the last decade, right? We've had a very polarized corporate sector. So 80% of the jobs are created in companies with less than 1 CR PAT. Give them a tax break, it doesn't cost the exchequer much, and give people earning less than 15 lakhs tax break or zero taxes, anyway up to 12-0, and you can very easily finance all of that by knocking off 10 to 15% of the Capex budget and still maintain fiscal discipline, please the bond market, and the rest of it. So that would be my dream budget, but let's see how close the FM gets to that.
Unfortunately, it's because the halwa ceremony is today, we know that the budget is going for
Sorry,
printing.
damn. I wish we'd done this program a week ago.
I'm sure she would have been listening. Okay, we're waiting for your queries, but one query coming in from Nisha Podar, Executive Editor Corporates.
Hi.
Yeah, hi. So while markets are betting for more attractive tax rates, I would like to put that across that funds, AIFs as well as private credit is also trying to make interest income much more attractive. And that's a large part which also needs to be addressed, which also fuels in to the growth capital. But linked to that, Japan for the first time is increasing its interest rate with dollar debasement, rupee depreciation, our bond yields going up, FII outflows all put together, FDI attraction as well as private Capex pick up. These two are going to be very, very critical for the next era of our own growth capital, with also Japan interest rates going up, where the inflows are going to then get distorted for India, which has been a natural partner for Japan. So for FDI inflows as well as private capex to pick up, what are the aspects that the government can really touch base on in the upcoming budget? Your suggestions.
The question is to?
Whoever wants to take it.
I'll take the FDI one. So this is FDI, I stress, this is not FPI. I think on the FDI piece, the government needs to do something about the Tiger Global verdict, right? Across the world, that sent shockwaves. That 2018 was when the matter was first litigated, and we're getting a verdict in 2026. I think private equity funds the world over, venture capitalists the world over, companies the world over will look at this and say, how on earth are we supposed to invest in a country where 8 years after the investment is disinvested, 8 years after that, the highest court in the land opines. I hope there is some clarity from the government on how India can provide a little bit more tax certainty on the FDI side. Continuing with the FDI piece, I think 2 budgets ago, the FM said that there will be a committees put together which will come up with recommendations on how red tape can be reduced. That was 2 budgets ago. I think it was reiterated a budget ago. I think the committee was put together. We're still waiting to hear what can be done to reduce red tape, whether it's for foreigners or for locals. I think it's a general matter of concern for investors that there's so many clearances, state, center, local government clearances. So that's the second piece I think that I think India needs to push forward on. If there is clarity on the budget, if the FM says there's a whole bunch of measures underway to give clarity on reduce red tape, I think that'll be terrific. And the final piece is stability on our foreign relationships, right? The EU-India FTA sounds like it's around the corner. 3 cheers for that. And hopefully the India-US FTA. If we can stabilize our foreign partners, stabilize the currency, give tax clarity, and give a low-touch regulatory regime, I think there'll be plenty of people interested in putting in FDI into India.
Queries coming in thick and fast, so I'm going to club a couple of them. Sunil writes in on our X saying, with tariffs likely to be the way of life for the next 3 years, what are the likely areas which need to be the focus of a retail investor? Part 1. Secondly, what specific budgetary actions are expected to mitigate tariff risks? I'm going to take this question first to Ravi.
So, as much as tariffs are going to be part of the next 3 years, so is a trade deal. EU FTA we just signed. So, if stocks have become cheap based on tariff deal not happening with US, probably we can focus on companies that are focused on geographies like Europe. So I don't think tariff can determine an investment policy or investment framework. Yes, you have to ensure that you don't have too much exposure with US. And if you're at a receiving end of the tariffs, then that should not be too much of a exposure. But at the end of the day, finally, what is going to hold you in good stead is a company that can build adjacencies, can diversify geographically, has that economic moat to survive a tariff period as well, and that is what, and good valuations. That is what is going to hold you in good stead finally. I don't think one should try to move their entire portfolio based on US deal happening, not happening, because tomorrow if it happens, then you cannot go about suddenly changing the entire portfolio.
Can the budget do something, Ravi, for this? So one is the portfolio, second is what the government can do for this.
No, government is already doing whatever it can, and a lot of it is happening outside of the budget. So GST cut happened outside of the budget. I don't think there is ease of doing business, more focus from the longer term perspective in terms of attracting flows. All those kind of things government will do, but I don't think there will be any specific step that because there is a tariff imposed by US on us that let's do something. We have to just unclog our plumbing system in the regulatory framework so that money can come in easily.
In terms of what, the first part of the question, what sectors should retail investors look at in the world of tariffs continuing for the next 3 years? Any answers there, Saurabh?
I think the answer is diversify, right? India is 3.5% of global equity markets. Most Indians have 100% of their equity exposure in India. I think that's a little over allocated to India. So diversify, at the very least think about a 50-50 allocation. where markets like Europe and America, which account for 70% of global equities, should in due course end up becoming half of your equity portfolio. And within India, the half that you keep in India, diversify within India. So what I often see is Indian investors have preponderance of their investments in small and mid cap. Again, that's, I think, overly risky. So within India, diversify, move at least half of your money, ideally 70% of your Indian allocation to large caps, keep 1/3 in small caps. And then, as I said, given that India is only 3.5% of global equity markets, think about moving half your portfolio into global equities. There's plenty of, across Europe, across America, small and mid caps are trading at 26-year lows. You're getting the reverse of what you're getting in India. You're getting 26-year highs in India. So diversify with or without tariffs. I think Ravi is right to say tariffs will come and go. With or without tariffs, it makes sense for Indian investors to diversify globally.
Mahima has more queries coming in. Mahima, we've eaten into Ask Profit, but there are queries coming in that you can give both of them. They've kindly agreed to stay on because of the volume of queries that are coming in. So we'll continue this only for a few minutes more.
Yeah, so the next query is from Vinod, who's writing in and wants to understand whether the budget 2026 can actually drive rural demand recovery. It's kind of on the cards, but it's yet to be seen in the financials of a lot of consumption companies. So your view on this?
No, I don't think budget will specifically drive anything further on the rural consumption side. Rural consumption recovery is on the anvil more because of the monsoon being good, more because we have had 3 bad years. So just considering that low base and considering that the focus is now in putting more money in the hands of people, so there will be a revival. But I don't expect anything specific, any specific step from the budget to do this.
Okay. I would just urge a word of caution on rural. I think the swing from NREGA to GRAMG, big switch. And remember GRAMG, I think majority of the spend has to be done by state governments. Last I knew, the state governments were borrowing furiously in the SDL market in Mumbai. How many of the state governments can finance their GRAMG obligations? I'm not 100% sure. And therefore, I think that's a big swing. End of NREGA, beginning of GRAMG, and big owners and state governments who are strapped for cash. I would just urge a word of caution on rural.
I'm just going to take this one query on railway stocks, which has come in. It's a good question from Rohit, who has said the railway stocks rallied sharply after budget 2025. After budget 2026, is there valuation comfort to improve rail stocks? Now, I think railway stocks have a very divided view on it. Is the story played out, or is there more to go? Saurabh, for you
I've
first.
never invested in a single railway stock in my life, so I think I'm the wrong person. I think Ravi might have a better view on this.
No, I think most of the story has panned out over the last 4 or 5 years, and the valuations are reflecting that. I wouldn't say there is anything. There can still be a one odd stock benefiting out of some scheme that government announces, but as a theme, as a sector, I think a lot of it has panned out already. And every year, of course, just before budget, we see this excitement around railway stock, but I won't succumb to that.
Actually, there are hardly, 3 or 4 more trading sessions to go, 3 more trading sessions to go, and we've seen no excitement thus far
No,
in
that's
the usual.
across the market, for
That's
sure.
across the market. Okay, so now before we let you go, last piece and wrap-up comments from both of you. What are the key sectors and market-specific, because that's what people watching really want to know, that would be on your watch list very closely, Ravi, as we go into the Sunday budget session?
I think one thing that Neeraj allude to earlier, the best, I think we are moving from the energy transition 1.0, which was build out of the solar capacity, to now managing that. If you build too much of renewables, it leads to a lot of variability, and that leads to grid destabilization. So storage is the next logical step in that. Without storage, we cannot manage the variability of the solar power, and hence we will have to now build out this phase. And this is the next, I think battery storage is at a stage where solar was probably 5-6 years back. So it is going to be almost double whatever the solar requirement is. In fact, every plant that is solar plus wind plus battery will require some overcapacity, because you have to build for the peak capacity, and that means it will actually lead to more solar build out than that is currently. It is a trigger for solar build out also to increase. Hydrogen will be the next step also over there. hydrogen will also green hydrogen will need solar as a backbone. So there are a couple of things lined up in this energy transition 2.0, and I think a budget should rightly focus on that. Outside of that also, I think regulation is evolving where we will incentivize these companies to make money so that they can backward integrate and build the adjacencies around this.
Got it. Sort of final word, one thing that you would watch out for.
I think fiscal consolidation is inevitable. As Tamanna said earlier, this is a government which is fiscally conservative. They're going to stay the path on that. Bond yields have been hardening in the last several months. Hopefully on the back of the budget, the bond yields cool off. If bond yields cool off, the cost of money in the Bombay money market drops. I think lenders should benefit. So solid conservative budget should play into the hands of lenders. Leaving that aside, the EU-India FTA, I think a thawing of relationships between us and China, export-oriented companies who sell their stuff, who used to sell their stuff to America, will now redirect themselves towards Europe, to Europe and China, and therefore I've loaded up on several exporters, light industrial exporters, whose stock prices are down 20-25% because of President Trump. I'm hoping that on the back of EU-India FTA and thawing of relationships between India and China, our exporters find new markets to sell their produce in.
Ravi, question has come in for you on data centers. Would you like to answer it very quickly?
What exactly is the question?
The question is, would there be a focus on data centers in the budget? Even you can put on your if I were FM hat.
No, I think that's definitely the new area that is opening up. We haven't been part of the AI boom that is happening in the world. The first, for AI boom to India to become part of that story, first data center boom has to happen. I think we are at about 0.5 gigawatt. We are now having visibility of probably going between 10 and 15 gigawatt by the turn of this decade. And I think that will herald a fantastic Capex opportunities. Unfortunately, there are not too many plays in India because most of the chips and hardware all comes from outside India. So it will only be cooling solutions company or some power solutions company that will have some play in this kind of a theme. And but yes, if we want to become a major AI power in the world, data center is a must. And I think we saw Minister Ashwini Vaishnaw talk very articulately about what role India will play. So it might not be a huge capex, but we definitely need to incentivize data center into the country.
And that's exactly why Indians need to diversify. I think Ravi beautifully put it right. The chips that we use on our phones, on our laptops, we don't make them. The lithography on those, we don't make them. The data centers, we don't make them, right? So if you want to live in the modern world and you want to make money from equity markets, go global. The government has made it easy, low cost, tax efficient to go global. And those who are watching this, if you live in a high-tech world, there's very little of that in the Indian market. You need to invest in the markets of Europe, America, and East Asia to avail of that.
Oh, wow. So go global. While the country is trying to go local, every country is trying to go local. At least with your investments, you need to diversify and go global as well. Well, that's good a note as any to end off. I know everyone didn't get their questions in, but keep bringing them in because we're going to be speaking to experts through the rest of this week as well. But for now, Ravi, Saurabh, thank you so much for joining in. Thank you, viewers, for tuning in to the Big Budget Town Hall on NDTV Profit. We'll take a very short break and we'll be right back.